Hi, everyone. So, as an owner of a bookkeeping business, uh, one of the things we often get asked or clients often need help with are paying attention to the cash flow of the business. And I wanted to address one of these items because it can cause some small businesses to run into cash flow problems. Okay. Um, So this specifically deals with sales tax. Um, so, for instance, retail businesses, a lot of like landscaping, construction landscaping, electricians, various different industries, you will have to charge sales tax on your invoices. And so if you use software that keeps track of this, um, you can use that to, pay these bills to the state that you're in. But you know, it's one of those things that can kind of go under the radar if you're not careful with it. Okay, so what happens is, and so like for instance, my bookkeeping business is based in Washington State. We work with all states. If a business is anywhere, doesn't really matter to us as far as what state it is, because a lot of these states work very similarly in terms of how they charge sales tax, how often you have to pay the agency, blah, blah, blah. So, in the state of Washington, we pay through an agency called the Department of Revenue. That might be called something else in another state. Um, but when a business gets set up, you can perhaps be on an annual pay schedule with the state, or you can be on a quarterly pay schedule with the state, or a monthly pay schedule. Now, so for example, my business is on an annual pay cycle for uh, business and occupation tax. I don't have to charge sales taxes to clients of mine, um, but I'm on an annual pay schedule for this, what's called a business and occupancy tax in the state of Washington. Not every state has that. Okay. So I'm on an annual pay schedule. So if I did charge sales tax, I may still stay on an annual pay schedule, but I doubt that. I would bet that the state would probably change that cycle. Um, Clients ask me all the time, can we change the cycle? And it's like, no. The state does that. So they decide based on your revenue if they want to change you to a faster paying cycle, It's kind of like the IRS. The IRS does that, to businesses at times. Um, but that's another conversation for another day. All right. Um, so for instance, now some businesses may have small amounts of sales tax. So, so all of this is relative, for any individual business. Um, if you've got $500 in sales tax that you owe, that may not be a cash flow issue for you, but it also might be. Okay. So, one of the things that we recommend to clients all the time, especially if they're on like a quarterly pay schedule, is that the business create a separate account at the bank where the sales tax that has been collected in a month will be moved to that account. Because as a business owner, you've got to get that money out because because okay, so let's talk about it this way. On a sales invoice, and you've got a $10,000 invoice, and let's say that you've charged, you know, $400 for sales tax. When that invoice gets paid, that $400 is not yours to spend as a small business. Okay. That is actually the state's money. Okay. So you need to get that out of your regular operating expenses account at the bank. Okay. So one of the things that you could do or your bookkeeper can do is at the end of every month, take a look at, okay, so uh, what is the amount of sales tax? So either you as the business owner can move that money into the sales tax paying account number, or your bookkeeper could do it if you give them access to do that sort of thing. And so you move that money out so that the bill can be paid when it is due. Okay. Because honestly, I've seen this happen a few times with clients of ours where they don't pay attention to this kind of advice. And then they get into cash flow troubles because they have spent money that actually was owed to a tax agency. Uh, and that can get really dicey. And especially if you get into trouble with these different taxing agencies, after a while, they may not allow you to do business again. Uh, it's one of those things that could have severe consequences for a small business owner, and so you don't want to run afoul of, especially over a long period of time, with a taxing agency. Okay, so our recommendation from a cash flow management perspective is that when you're paid these sales taxes, you move that money out um, on a fairly regular basis out of your operating expenses account into a specific sales tax agency payable account that you have, and you pay that bill from there rather than from the operating expenses. Okay. Um, so uh, that's that's kind of how we have found works best for clients, is to have a strategy like that, because a quarterly schedule can really mess with you if you've got a lot of sales tax payable, or if your budget is not such that you can handle however much money that is uh, uh, being spent out of your regular operating expenses budget. Okay, so if you have any questions about that, you can always post questions in the chat area, where you can post comments or questions on YouTube. We'd be happy to answer your questions about that. And of course, if you need help with bookkeeping at all, you can go to calendly.com/Corebridge. That's spelled COEUR bridge.com, and book some time with us to talk to us. Okay. All right. Thanks so much. And I'll talk to you soon.